will trickle in. We're starting on time for once. Thank you, KG, for that. Please. So we have, I guess, the post-lunch graveyard shift. It's not my job, my panelist's job to keep you awake for the next 30 minutes to 45 minutes. So obviously, you see the topic of our panel today. But mainly, we're going to be unpacking three key components. Technology and the emergence of new technology and adoption of existing one. Financial institutions and the role they play and they continue to play in the context of the financing trade gap that exists, as well as the disruptions we can expect in supply chains over the next 2, 3, 4, 5 years, and what is our collective role in that context. I'm Apoorv, I'll be your moderator, so I'll be doing the least amount of talking. And I look after our client engagement and partnerships team here at SC Ventures. I'm rejoined on stage with some panelists. So KG, I think this is our third year in a row that we're on the same panel discussing.
I've gotten used to this one.
But I'm also joined by new panelists, Wendy and Hui. So good to have you folks here. I'll pass it to you shortly to kind of introduce yourself. So let me give a bit of context as to some of the research that I've done. Actually, it's just ChatGPT. Known fact, MSMEs are, obviously the global backbone of the global economy. Actually, matter of fact, for SC Ventures, it is one of our 4 high conviction themes, and one of the first ventures we ever created was to support the SME ecosystem starting in India, which is unsolved. And that's obviously dovetailed into a much bigger ecosystem with investments and ventures, which we'll take some time to talk about today. That being said, there still persists about a $1.7 trillion trade financing gap for this ecosystem. It's still hard to acquire financing, it's still hard to acquire and sort of bank with the big banks to help yourself grow. And that's part of what we're looking to solve, but that's also a pretty big persistent gap that exists. So I will try and unpack some of these components. Most importantly as well, what is actually hindering digital adoption in this ecosystem? And then we'll take some time. There's an elephant in the room. There's actually 2 elephants in the room. One is the AI and the US election. I'll come back to both of those. But we'll talk a bit about AI and the impact on the SME ecosystem, as well as some of the technologies that are actually what I would say are moving into the institutional adoption phase, which is tokenization and what that could mean in the context of supply chains, especially in the context of providing financing to deeper tiers of those supply chains. So before I move on, maybe we can have our panelists, esteemed panelists, introduce themselves, starting with KG, and we can go in that order.
Hey, thanks Apoorv. Always a pleasure, although this is the third in a row that I'm doing. It's almost predictable script from Apoorv, but no, he's very innovative as we go along. So I promise you it's going to be exciting for the next 40 minutes. Thanks to Apoorv. Anyway, so I'm King Shuk, KG for short. I am the co-founder and CEO of Task Connect, Treasury and Supply Chain Connect. We are WeCAS. We are a working capital as a service platform focused on Asia, obviously incubated and funded by Standard Chartered Ventures. A little bit about myself. First third of my 25, 26 years of experience has been in the telecoms and technology space, and thereafter in corporate and institutional banking with Standard Chartered. So therefore, I bring the fin and tech together now to run a fintech. What do we essentially do? We are not a garage shed experiment in Task Connect, as Apoorv alluded to a little bit. We grew, our genesis lies in a real world problem statement by a real client with cross-border supply chain challenges. And that's Lenovo, and that's how we grew, and that's the problem statement that we saw in front of us. And we used finance and technology to solve a lot of their scale, convergence, democracy of working capital as a solution for them. 2.5 years hence, we have, knock on wood, grown reasonably. We have about 25 plus, client anchor clients on the platform. But more importantly, we are actually helping to touch and reach the first and the last miles of, trade and value chains. And that essentially is where the key components of the gap ecosystem lies when it comes to MSMEs, SMEs, and therefore the funding financing gaps. We are trying to cross that, disrupt that, and enable a bridge to bring timely and cost-effective working capital to this ecosystem. So yeah, happy to be here, and on to Wendy.
Yeah. So I'm Wendy from Malaysia. My past life, I was a banker for almost 18 to 20 years. I was with three global banks. I was doing corporate banking, transaction banking, which covers your trade finance requirements, your working capital requirements, your cash management, liquidity management, FX and all. Then about a year plus ago, I started a venture in Malaysia, and this venture was really to support who we call the national priority of Malaysia, right? The backbone of the economy of Malaysia, which are the MSMEs and SMEs. So they really cover almost 40-50% of the GDP, the employment of the country, and really significant to the economy. So what we did was actually to build, we wanted to help the MSMEs to really grow, to simplify their growth. So what we did was to build first of its kind, a platform that is really bank agnostic, industry specific agnostic as well, and the ability for it to unify, bringing different participants, whether it's a seller, it's a buyer, it's a SME or a FI onto the platform, and really enabling access to financing. So that's my introduction.
Hi everybody, my name is Huilina, short Hui, call me Hui. I'm a non-banker, so I'm the odd one out here. I've never had a banking experience. In fact, my whole life I spent entirely with Unilever. So if you see my blood is blue inside, in case you know, Unilever has a blue logo, so those who don't know, so you Google it or ChatGPT it. I'm not sure why I'm here, but I think I've been invited to speak about my experience and my business experience in the company. So I'm hoping that I'll bring some insights to the real operational challenges that the business today face, and hopefully, will add a lot of insights to your questions and anything that you might like to know about fast-moving consumer goods. I've been with Unilever, as I said, all my life, but I've been traveling to a lot of countries. So my first half of my career I spent in Australia, and then I moved around in the region. We call it the Asia, Africa, Russia, before Russia became like a separate on its own. But yeah, but I've been really blessed in this company because I think I spent a lot of time, 20 plus years in the multinationals. I've seen a lot of changes, so where we used to be and now where we are in terms of digital adoption, but also the way that we embrace technology has always come to do with not only finding the right partner, as what KG mentioned. That's how we met, by the way. We find the right partner to work with each other, but also the fact that we want to enable the growth in the company through other avenues rather than traditional methods. So I think this is why I'm here to speak about what are the things that is important for companies today to not only embrace technology, but also the mindset and the behavior that we need to have in terms of actioning those. Yeah, so hopefully I can add some values and make it more interesting from that sense. So thank you.
Great. So I'm going to get right into it, into elephant in the room number one. And I want to talk about it a little bit more from a macro standpoint. So obviously a very important week for Singapore with Singapore FinTech Festival, but also a very important week for the world with the US election. Now, previously, and this is an open question to all the panelists, previously in the last few elections, we've seen things like trade wars, to import tariffs, to some other sort of odd policies. And I'm not asking for your preference, by the way, as to who you're voting for. But I'm more curious as to, what type of disruptions could you expect on the back of the US election in the next 6 to 12 months? And what would be your role to play in your organizations in that context? Anybody first? Anyone's fine, by the way. It's an open question.
Yeah, I was responding to what he was trying, because this is not part of the list of questions you sent me. But to be honest, I stopped following the news when I knew that Trump was in the election. So I was like, I switched off. So just that's the truth. So I'm not going to tell you who I want to vote for. But what I'm trying to say is that I think regardless of who takes over in the office, I think disruption will continue anyway, because I think politically, of course, there will be a lot of noise, but I think we need to, as a company who is very resilient to a lot of who decides the leadership, I think regardless of the leadership, I think it will, yes, it will bring some chaos, but I think the true company that really have strong foundation will actually mitigate against it. So I do think that we, especially in my company, my CEO doesn't believe on the who politically will be the winner, right? So I think from that sense, yeah, so it's just news and lots of chaos that is being politically displayed, but yeah, I don't think it will be disruptive in my view, in my company's view, in that sense.
I think I'm just giving a Malaysian's perspective to this. I think Malaysia is actually in a very good strategic situation today about being the place where a lot of FDIs are coming in, whether it's from China, whether it's from the US, whether it's because of the China +1, China +2 strategy. There are a lot of incentives from the government to bring it in. So I feel that well, the outcome of the election will also kind of equate to whether the trade tariffs will increase in this sense. So something that we need to really look at, whether the change of the US president will have more implications to how Malaysia can still stay as a neutral position to many different investments. So I think this is really open to see what happens after today and everything.
Yeah, no, I totally agree with what Hui and Wendy said. But again, I mean, if you look back, it's a little funny, isn't it? We are back to almost a square one situation from 2016, 2017, where the guy who actually started it is likely to be back again, right? So at that time, you dealt with chaos as a shock. Today, chaos is a template. So therefore, what you would probably expect is a predictable chaos. So my theory is that, the world has largely discounted the fact that supply chain disruptions, macroeconomic shocks are going to be the mainstay for the future. If our man comes in there, it's going to be the shocks and event shocks that will probably have to be dealt with and ironed out over time. If it's the other one, the blue comes in, then it'll probably be a little better managed and a little better scope for democratic discussions possible, right? But that said, in my experience of with Task Connect over the last 2.5 years, there is one great general truth that I have come to realize is that, and especially that we are so focused on Asia, ASEAN, key hub markets of China, India, etc. included, is that there is a reason that Asia is a hub and center for global and world supply chains. There's a reason that some of the factors of production for the world economies actually reside in ASEAN and Asia. Okay, that ain't gonna change. That's not changing. You can't take those away, right? So for that reason, I think it is about how you manage and maneuver through these shocks is going to decide whether you're in the opportune zone or you're in the other zone. So, and that's something that smart business people, smart politicians, policymakers, etc. should probably steer, irrespective. A little long diatribe, but yeah.
No, it's very good, and I liked how you said chaos as a template. It's kind of story of my life, but that's a separate point altogether. No, but I think it's quite interesting because exactly to that point, KG, that to an extent we've been there, done that. And now it's a question of, okay, if this is the expectation and if it becomes Trump in power again, you would almost expect to be able to predict the disruption that's coming in, whether you're an SME or you're a large anchor, and be in a better position to navigate around it. And it doesn't matter which part of the world you're in. So I fully agree with that. I'm going to go to the second elephant in the room, and that's artificial intelligence. So, and by the way, I will not go off script again. That was the only one. So, I think I want to take a sort of a top-down view on the AI space. I think the last year, at least KG and I were on the same panel. AI was emerging, but the applications of that were still very nuanced, or new rather. But what we're seeing now is actually AI getting into many different spaces, whether it's anywhere from ChatGPT, which people like all of us use, to actually implementations into treasuries, to forecasting, and so on and so forth. So I guess the wider question is, how is AI, from your perspective, transferring the SME ecosystem? Is it providing better access to financing? Could it provide better access to financing? And more importantly, I think, are you seeing, either from an anchor standpoint and maybe for your perspective, or an SME standpoint, an actual increase in adoption of AI, and in what use cases? So maybe I'll pause there, and Wendy, maybe you can go first.
Yeah. So I strongly believe that the ultimate benefactor of AI would definitely be the MSMEs or the SMEs, but who really needs this AI or technology is really around, in my space, is around the funders, and also basically the funders, and also some of the anchors as well. So why I say this? Because the funders definitely need to make better decisioning, right? Credit decisioning. But same as the anchors, they want to have a more robust, better supply chain. So I also remember, last year we were invited to a central bank event, and that event with central bank and together with probably 8 to 10 funders, it was really to do an assessment on how funders can bridge the gap. What are the gaps towards providing access to financing to this high risk sort of category of SMEs, right? And so what came out from that event is basically two parts, two main gaps. The first one was around credit. The problem with funders was that they just didn't have sufficient data. They just didn't have enough credit profiling of the SMEs that they were going to. So I think what was important when we designed, during or prior to us designing the platform, right, what was important for us was to put in the ability to access commerce data. So what we did was we ensured that commerce data was also used in order, and of course AI as well, because AI is able to kind of gather large data sets and kind of quickly and efficiently process them into results or decision making that can that maybe a human can miss as well, right? And the patterns as well. So this was really important, especially on our platform, to allow the data of over time, the transaction data to be captured, and this was then provided back to the funders so that they can get over time good credit profiling of the MSMEs. And the other gap was really around the whole operational part of it, because operations very hassle, there's a lot of hassle when it's through a manual process. So what we did was really to make sure that it's end-to-end, right? It's end-to-end digital, so that you can make sure that it's minimal disruption using technology.
Absolutely. I'd like to come to you actually from kind of an anchor-driven approach or a large organization approach. So I have two questions, and they're kind of in different contexts. One is, I think, AI is not entirely in the SME DNA yet. I think to a large extent there's an element of literacy, but there's also a top-down approach. So I think from a Unilever standpoint, kind of what's your views or what's your approach when dealing with SMEs and providing that technology? And then the flip side of that question, which you can take now or later, is that obviously Unilever is operating in more than 200 countries around the world, and there is essentially a large layer of different operations that you have. So is there any AI from a Unilever standpoint that you're applying to yourself that has actually provided some significant upside yet, or something in the pipeline? So maybe those two for you?
Yeah, so I think maybe let me start from not from the AI side, but I think from a digital transformation that our company, especially my business units, is really not only embracing, but I think recently, as of recent, we changed our title to, like you saw my title here, finance controller, but we all changed our title to digital finance controller. That's how serious we wanted our team in terms of mindset, and also from the way that we even think, how does digital help us in our day-to-day life? I think that's the first thing that we must do before even taking the AI route, right? Because to me, the AI is quite advanced, but for us, is about the basic. So everybody changed their title in LinkedIn. So this might be an old one. So everybody had to edit their title. So that's one thing we have to do. And the second thing that we said is that as a company, the purpose as fast-moving consumer goods is that we want to be now known as a digital fast-moving consumer goods, not a dinosaur FMCG. So I think that's also resonates with a lot of the things you may have read about. I'm talking about banks now, like DBS, because I think they were the one who told me that they used to be called Dinosaur Bank or something like that, the D, but now they want to be digital. But I think that resonates quite a lot with me, because unless we do it, AI is not going to help us. I think that's the first thing. So what we do today is about brushing teeth, right? It's our daily stuff that we do. We must have digital at the back of our mind. So that's the first thing that we are instilling in a lot of our leadership team, is to role model how digital can help us, enable us in our day-to-day job, and then our teams. So that's the first step. And then the second thing that we want to do is that AI is actually fundamentally underpins the digital transformation journey that we want to embark as a journey, because and it's a growth enabler, and it's a must for everybody that is kind of like involved in an operational challenges and operations like me on a day-to-day basis. I can tell you that all the lenses that we apply now is about how do we model the data using machine learning? How do we model the data using AI as an enabler? Because we cannot compete with ChatGPT. I mean, it brings all the travel itinerary. I'm going to Japan in 2 days' time, and I just asked ChatGPT to plan an itinerary for me, and it's wonderful. So how do I then ask my team to ask the right questions? Because AI can help us to get the right answer. But I think at the first instance is that how do we learn how to ask the right question is what I ask my team to learn as part of their upskilling journey. So I think that's the second thing, because AI is an enabler, it's not the answer. I think that's the thing that I learned as well personally when I look into this journey myself. And I think thirdly is that I think we need to be responsible, because a lot of the things that we do in AI space, I think we tend to rely on the data, but I think data is, as you know, garbage in, garbage out as well. A lot of the struggle that we find in is SMEs like us is that a lot of our data, in fact, we have so much data, we don't even know how to use it. And a lot of the structure is not there. So a lot of the time that we spend today is about data cleansing, structuring, on how do we bring the insight and using AI to enable, generate better forecasts so that we can then plan ahead. It's a bit like the chaos that we're going to embark on in 2 days' time. You never know, right? But wouldn't it be wonderful if somebody can predict and put in all the things that he would probably implement if he got chosen into a model and said, you know what, in the next 30 days, he will implement 1, 2, 3, 4. And this is something that we want to be able to predict much earlier, and then we can act accordingly and faster. Because agility and growth is the fundamentals of why we want to do and why we want to implement AI. So yeah, sorry for the long answer.
No, that's good.
That's really what I find from a business sense. Yeah.
Absolutely. So we got obviously the SME view, and then now we've gotten the digital FMCG view. KG, over to you. So obviously your tech stack is entirely new compared to some of the other platforms out there. I know you're working on something leveraging AI within Task Connect as well. I guess what's the role of the platforms? Both servicing the anchors, but also the ultimate supply chain SMEs that exist within those supply chains.
firstly, I have to say that it's so insightful and refreshing to hear we talk about a digital transformation for an institution as big and as historically glorified as Unilever is, right? It is not easy for such institutions to cut through layers and move and change and transform. So we've been fortunate to be partners, in our services with Unilever and likes of Unilever as institutions, and I can completely say that there is a huge realization amongst large institutions to adopt digital transformation. I'll come to AI in a bit, but digital transformation per se. But I think there is a great diversity in terms of the speed and agility in which institutions are adopting or not. So, and I think that is where a lot of the ones that progress and proceed versus the ones that will get left behind will be decided in a couple of years' time, very shortly. So now coming to AI, right? And I think rightfully you spanned the pyramid across from the SMEs down up to the enterprise, right? And at Task Connect as a platform, as a working capital as a service, we focus on delivering the transformation value at an enterprise top down, because we believe strongly that the ecosystem of the suppliers, buyers across the value chain is actually held and bound together by the large anchor who makes business happen. And if you're transforming from the top down, you're actually passing real values and benefits of digital transformation right to the first and the last miles. And that's how you bring transformation. So if you're able to transform the enterprise at the top, the story becomes easier. But it's easier said than done. So when AI did come in, maybe a few years past, right? Initially, as always, with technology, it is not strategy that comes first, it's fantasy that comes first, right? So it was more fantasy, a buzz, a mob word. So everybody would jump on a bandwagon to get themselves AI tagged, right? What we have realized is that AI as a algorithmic island is probably suboptimal. It is probably not self-serving much if you just keep the AI as a standalone stack somewhere, right? It has to be linked to a use case relevance. And that's how we have actually developed our AI enablement. Our utility that we have developed is essentially born out of the fact that this is coming from a real industry use case. Maybe I'll share a little bit about what we do in that space, is that a large institution such as Unilever, you have a very large procurement organization, which is to deal with zillions of suppliers, big, small, medium, across multiple markets. You have to onboard them. You do that 1st of January a year, right? And thereafter, it is not possible for you to keep a real or a near real-time monitor on their sentiment health check, right? And that came as a compelling sort of use case to us to develop on our stack as to how we could leverage AI to actually create value for that procurement organization to the same enterprise where we are actually doing working capital transformation. So we developed the tool, the utility, which is able to actually bring near-term monitoring of your sentiments across your value chain. It could be suppliers, it could be customers, it could be various stakeholders that you can, using AI to actually scrub zillion data formats and zillion data lakes, public and institutional or syndicated, which can help you to arrive at more real-time risk decisions. And something that Wendy also alluded to is that what does it help funders, banks do? You get a better real-time insight, a trace into the underlying risks, which, believe me, you have no idea that they are happening, and you will come to know of it too late. Yeah, and in our experience, in one of our auto clients, for example, they asked us to actually do that scanning for some of their downstream distributors, and we picked up a noise through our engine ahead of what they could have probably been hit with, and it actually gave them those risk triggers to act early. Call that guy saying that, hey, are you okay? Can we help in? Otherwise, it would be too late post facto and the supply chain would be disrupted, right? So these are, some of the use cases that we are seeing the use of AI to be more compelling as a utility than just, treating it for pure, algorithmic purpose. Of course, I mean, data analytics, getting smarter data out there, therefore getting into more targeted and personalized, maybe, business marketing, etc. Of course helps the analytics bit for businesses. That's across the board. But some of the areas that you mentioned, particularly as a platform, we are seeing this as a use case development.
Oh, that's great. I think first of all, thank you for all the answers. I think, I can definitely, if there's time permitting, come back to things around, upscaling in the context of prompt engineering, to dynamic supply chains in the context of getting access to this data and getting informed ahead of time. But I do want to move on to the third thing I said I would, which is tokenization. Now, in my opinion, this technology has gone far beyond fantasy or even strategy, and it's very much in kind of institutionalization and adoption phase. And by the way, it's been one of our other high conviction themes at SC Ventures, which is digital assets. Now, what we have definitely seen is adoption and use cases of this technology starting initially from speculation, then moving into payments and other components of the financial services industry. Where I think, at least from my perspective, and I could be uninformed in that regard, what I have not seen is these supply chains utilizing tokenization at scale and getting funding to those deeper tiers by fractionalizing invoicing to other aspects. We have seen some green shoots, especially in China, where some of these companies, and you might have seen our panel earlier, have done quite well in that regard. But maybe KJ, I'll come right back to you, because I think in the context of stable coins and digital assets and sort of supply chains, what are you seeing, and what do you think is actually impacting scale and hindering adoption at deeper tiers of the supply chain using this technology?
Yeah, no, thanks. Certainly I see this as the technology and the utility for the future. Are we there today yet? No. We are still solving a level 1, phase 1 problem. We are still getting timely, cost-effective working capital to just that 1.7 trillion that you mentioned as the gap that needs to be funded at the first and the last miles, right? The basics are being done today. But as I can see the evolution of this, and particularly versus maybe 12, 24 months back to now, I think that shift from pilot to at scale is possibly happening, right? Now, if you look at tokenization, stablecoin is one of the forms and formats in which you could enable tokenization, i.e. smart contracting, etc. There are a few stakeholders along the, the supply chain or the value chain, right? There's the issuer, there's the anchor buyer, there is the tier 1s and the tier 2s and the tier 3s. And you essentially need to or intend to actually get to the deeper tiers for this to be, really impactful. So the problem is that all of these 3 or 4 different tiers that lie there are in different stages of technology evolution. So are they ready today at one go to adopt the entire, utility as a value chain? Not really. Are they getting there? Yes, most certainly. There are some parts of it that are probably, getting done faster. And I would also say that there are some geographies and markets and regulators who are getting smarter, realizing that this is going to be the future, and therefore, regulators like Singapore, MAS, like Hong Kong, HKMA, a few others, they've already embarked on some of these deep tier tokenization and stablecoin projects. Yeah. So from the project to a life, it's taking its baby steps, but I think in a 2 to 3 year time frame, we'll be talking very different. Yeah. And also the role of the funders here to recognize the fact that the fiat to smart is something that has to probably cut through a few layers and matrices within the organization to be adopted. Unless that happens, nothing of this will work. But I think banks like Standard Chartered are already ahead in that and out there, and some of the other global banks are also taking part in that. So yeah, I mean, where are we today? So pilot to scale, definitely. How is it going to unravel? Probably in a few different stages. We are already, in fact, seeing in some of our large other, enterprise, use cases where it may not, it's not getting adopted at the entire value chain of the enterprise, but pockets of the enterprise. For example, some highly illiquid, markets of, where currencies are illiquid. There, you'll be very surprised that last mile distributors are actually storing in stable coins, in highly illiquid FX markets, and they're using that to enable a benchmark for liquidity and benchmark for conversion, and also sort of manage the risks. Participants are different there, not necessarily banks there, but that's where I think the evolution will start to happen, because those are easier to adopt, and that's how the wave of change of adoption will happen before it hits the entire value chain, which is what we really need to be there.
Absolutely. Wendy, I actually thank you, because that's pretty much, from a key stakeholder standpoint, largely top-down, right? There's an element of regulators, there's an element of large anchors, and to an extent, the platforms like TaskConnect to drive that change, drive that adoption, and more importantly, drive that scale in the context of this technology. Wendy, I want to come to you from an SME standpoint. What's their role? I mean, is this something that they can drive bottom up, or will they have to wait for the large stakeholders, the large institutions to adopt this technology, or is this something being demanded from their perspective as well?
I think, yeah. I mean, from the perspective of the SMEs, they are still quite not very matured at this point in time. So a lot of them, I mean, at least from a Malaysian perspective, what I can see is that they are still struggling to get into digitalization, trying to get into how to get them into the financial ecosystem. So I think this would be kind of still a long haul before people get further into, and more appropriately to the larger part of it. That would be my view.
Okay, well, we're almost at the end. We've talked about the US election and the impact on supply chains, and I guess to an extent preferences. We've talked about AI in the context of, or rather the opportunity with AI, both from an anchor to a large corporate and the context of upskilling in that regard, and now tokenization. So maybe what I'll do is, for the last 2 to 3 minutes that we have left, I will open it up to the room to see if there's any questions from anybody. Yes, please.
My question is more to Hui about Unilever, right? How do you manage your supplier? And then what do you use tasks to kind of manage the funding and any more insight? Because at the beginning you said you want to share from the real world, how you get. Because I'm more in the digital platform space, and we know there's different platform, but now they really scale in terms of adoption.
Yeah.
But
Yeah. So. It's interesting because when we met, it's a bit like finding a right partner is like finding the right husband. I don't know. I find it not like KG is not sort of like KG definitely is not in my league, but what I'm trying to say is that in fact it was by coincidence. Below, yeah. No. What I'm trying to say is that. We actually had a problem statement that is not related to suppliers. In fact, a lot of our needs in the supply side has been quite met by quite a lot of banks and financial institutions, so like Standard Chartered and many other banks. So our problem is on the other side, which is more on the customer side. Now, how we came about resolving this problem is actually around. How do you call it? You really need to be very, very clear on your problem statement, because I think a lot of the times we are not even clear on why we are doing certain things. So the problem statement was scrutinized, I remembered, 6 different times in 6 different meetings, because until you ask the why 6 times into the last detail, I think you're not even clear yourself. Right, so that is the reason why how we started. That's number 1, and number 2 is that the problems that we face, in fact, is very simple problems. And if you cannot explain your problem to a 5-year-old, who is my daughter, who is my test case, you will not be able to communicate that problem to another person to resolve it. So at that point in time, I think when we spoke about Task Connect and the partnership we had, is that we had a problem of collecting money, basically, in currencies and markets where we are not able to take the money out, right? So there's a currency restriction. So that's how we came aboard this particular problem and the platform that they're offering. I think, as what KG said, a lot of these digital initiatives in terms of coins and things like that will be something that in future quite interesting. In fact, I'm a wait and see approach, because we've just started something that really worked for our solution, for our need. And it also depends, because sometimes you don't want to just copy and paste your problem to another industry or solution to another company, because a lot of our problems may be similar, but the root cause is different. So that's the reason why I think when you look at your solutioning and platform, be mindful of what actually is the need, because if you're not clear on the customers and the geographies that you're serving and the problem that you're trying to solve, I think you're gonna come back with a solution that is only generic, and you're not going to be able to address that root causes. So, and the other thing that we really experimented is that we experimented with the right markets as well, and knowing the right customers that set out in a criteria that we have come up with together with, of course, Task Connect. We are able to enable this technology for our customers. And I think that customer satisfaction and experience is really, really important, because very often internally we think it's great, but externally the customers thinks it's it's not working well for them. So I think that connection with the customers, that feedback loop coming back from reality back into the solutioning, and how fast can we turn out those solutions into real models. I think that to me is the differentiator, because we rolled out this solution. It's only been 1 year, but it seems like it's been only yesterday. But yeah, so it's it's not that we've been in partnership for like 10 years or something like that, because that's how Unilever used to work. So 10 years you get maybe like one big hurrah, and then you get this mega celebration. But no, now we measure ourselves in weeks. We go into pilot, it doesn't work, we move on, we move to another customer. I think that real cycle and experiment needs to be really tested, and always second. The more challenge you get, the better. I think we don't want people also to tell us, oh, everything is great, it's all superficial, it's good, but actually the underneath is really not working. So yeah, we really want people who are honest about what their problem is. So yeah.
Thank you. There's one more.
So one more question. Okay, it's on scope 3 emissions. So how is it evolving in terms of measuring scope 3 emissions across the supply chain, given the sustainability directives and all of that?
To be honest, this is a new area for us as well, because Unilever globally we have standards that we need to meet. I think we will be in scope in 2026. From my business unit perspective, we'll be locally in scope. So I think any area in ESG, as well as a lot of the sustainability reporting, we are in discussion at the moment. So it's an interesting question, because I think for myself, I'm also learning about the new reporting standards. But I think we'll be more than welcome to have any inputs from anyone in this area, because it's a new area. It's not new for Unilever because we are big on sustainability, but specifically in terms of reporting for specific business unit that I'm covering, that will be the challenge, because it's not like we have certain reporting requirements that is not globally adopted by Unilever, for example. So I think we just have to really watch this space and see. Yeah.
If I may quickly pick up a little bit on that. So we're definitely seeing a lot of interest from clients, particularly in terms of enabling platforms to accelerate the ESG agenda, particularly at scope 3 level. Scope 1 and 2 is fairly easy, simpler, endogenous to the enterprise, you can measure what you burn. But it is the external or exogenous ecosystem that is very difficult to actually measure. So therefore, the problem really comes down to the middle office as to how do you track, trace and measure the compliance data that you have to fulfill your obligations of compliance. And the platforms, while they fulfilling your larger working capital as a service automation, treasury as a service automation, etc., supply chain automation, etc., they are also a very viable, tool or utility that can help you to cover the middle office function, because it is helping you to connect, converge, scale, and reach the traceable data to come back and compile into structured reportable formats, right? So we are agnostic to ESG, reporting tools or engines. We work with, multiple of such. We have a few of our own that we also connect with. But essentially, we are able to actually ingest that data, the unstructured data, and throw it back into the engine, who is then able to make meaning out of that into structured forms, and therefore give back for compliance purposes. The other thing that platforms are also able to do, or at least something that we have actually seen as a use case, with clients, is that you can use the innovation, the technology, to incentivize financing to enable adoption of ESG Scope 3 to your suppliers. So if you're an enterprise and there's a particular utility called dynamic discounting that we use to enable the enterprise to early pay, and early pay on the basis of the score, the ESG scores that we actually provide, to the suppliers on the basis of their compliances. So the 4-rated, highest rated supplier will probably get the best incentive, and vice versa, right? So until and unless you make a financial, sort of incentive, it is very difficult to drive adoption. And that's something that we are definitely seeing. We offer it in one of our 3 verticals, which is the value-added services, as Task Planet as a service. So, and that's something that we are seeing not adoption, but interest at this point. Thank you.
Okay, I'm being told to close down. So thank you, everybody. Nobody's fallen asleep. And thank you to my esteemed panelists.